Good morning, everybody. Welcome to the Real Estate Investor News Channel. This is your host, Tony Moreno, and I'm excited to have you guys here on this beautiful Thursday morning. Today, I got three beautiful, no, they're not really beautiful stories, but there's some stories. I mean, there's one that's kind of beautiful, but I got three stories for you guys. If you're new to the channel, consider subscribing and hitting the thumbs button if you like what you see. We're fairly new, so please stay tuned with us. We really go over three articles for the day for the top real estate news. Whether if you're a new real estate investor, whether you're an experienced investor, you're just somebody that just wants to know about real estate, you're in the right place to see the top real estate news we go over today. So first story that we got for you today is CPI hits 3.5%, no rates cut soon. We talked about this last week, but I want to talk some new takes who is this? This is Commercial CRE Daily. That they came up with that. I just want to discuss. And similarly, we're going to continue talking about more about inflation with another article that says, will inflation ever go down? That's where frustrated Americans are asking ahead of March CPI. So again, this happened recently, and this is just articles that came out that for all investors, every investor needs to be aware of this that's going on. And then the last article is these 5 cities could see over 3% apartment rent growth. Now, a lot of rents have been declining, so this is good news because, I mean, we not necessarily this needs to go up, but I know a lot of landlords are hurting, and a lot of places are very well saturated with new builds. So it's hurting pretty much uh, um, everybody because with inflation, everybody's hurt. So I know a lot of people are hurting. And I will say real estate is local. So not every market is the same. It all depends on the area that you're in, which we'll talk about. Actually, I believe in this third article, we're going to talk about what affects rent. So let's go over the first one. CPI hits 3.5%. No rates cut soon. So we talked about this again previously this week. And it says here, in March, the consumer price index, which again is the price of what consumers pay, the growth month over month or year over year for the items that you pay. So if you have an egg, what was it worth last year's versus today? So this surged by 3.5% year over year, exceeding the Fed's target of 2% and rose by 0.4 month over month. Now this is sad, and this is why I say see it's not too bad of a story, because the Fed, they want to bring rates down because that's what the people of America are asking. Now, they need to see that the economy is kind of slowing down, but not too much that it'll just create a crisis. But if they see that inflation is actually higher month over month, year over year, this is, or not year over year, because obviously it's been decreasing since last year, but month over month, this is not a good look, because really it benefits everybody for the economy to look good, so the Fed can cut the rates a little bit. So obviously it rose by 0.4 month over month, and that is not what we want to see. Anyway, it says here, we should potentially expect a delay in anticipated interest rate cuts. You can see here in this chart, if you're listening on the podcast, you won't be able to see the charts, but again, I'll post the links in the show notes. So you can see in 2023, the CPI was moving everywhere month over month. And then obviously in 2024, in the last 2 months, it was pretty much flat out. But again, it's not at the target that the Feds expected to. They want it to be at the 2% mark. And I mean, I'll speak on this because you may be somebody new that doesn't really understand that. But the reason why the Fed shoot for 2% is because the way our economy is assigned. Our economy, there has to be inflation 2%, because if not, people will hold to their money, or investors will hold their money expecting the dollars to go up in value. So by having an inflationary market, it incentivizes spending. So yeah. Let's see what else we got in this article. It says here, the agency said rising gas, rent, and mortgage costs accounted for over half of the monthly increase in this inflation index, which is pretty much everything but food. So, I mean, this is not good. I mean, the rates, most likely, I think they're going to increase rates, or they're going to keep it stable in order for them to see more results, to see what they need to do for their next move. So again, this is bad news for everybody. It says here energy prices notched up by 1.1% from the previous month. So that's That's pretty high. Anyways, the takeaway: the Feds might delay its initial rate cut because remember back in I think it was either November or December that uh, uh, the Fed chairman Jerome Powell he announced that in 2024 there'll be some cuts, hopefully bringing back to I believe it was like in the 5-4% range, but that is not looking too good. So we might not see interest rates reduce what everybody expected them to. So keeping interest rates high, what is the article saying is that most likely interest rates will remain high. This stance is to determine if 3% is the new normal over 2%. Now that's interesting. That the last portion that they say there. The Fed has always had, I think since I can't remember since when, I think since the 2000s, they had a 2% target as far as like the inflation goes. And if they increase that, that's not good. That means things will increase in price at a faster rate. So I don't know. It's scary. So second story, which is kind of related to the first one. Will inflation ever go down? That's for frustrated Americans are asking ahead of March CPI. Again, talking about CPI. When will prices go down? Here's which items actually could get cheaper. So we'll see. The consumer price index, which measures inflation, has hovered above 3% for several months now. The good news is that the pace of broader price increase has slowed significantly since peaking in summer 2022. So if we go back to 2022, we were, I believe, in the 9-8% range, which is crazy. I mean, obviously we're living that now because we see those prices they stayed with us. So now things are a little bit slower, but they're still going up higher than the goal that the Fed is shooting for. So that's still not good. It's better, but it's still not good. It says here a decreasing inflation rate, also known as disinflation, doesn't mean that prices are coming down. They're still rising just at a slower rate. So again, what I just mentioned, it's not good, but it's better, but it's not super good because they're still increasing higher than expected. They're just a little bit increasing at a little bit slower rate. They wanted to point out here, for example, when things actually decrease in value, which is very rare. And I highlighted this because I think it's bad info. It says eggs here are one example. Prices shot up last year after an avian flu outbreak wiped out farmers' flock, peaking at an average cost of $4.82. We all remember this when the price of eggs went up really high. This is for a dozen. But by this January, they're falling back to $2.52. And again, that wasn't because of something that the Fed did. That was just that there was some flu, and that's why they went up in value because the supply was super low. So that, I mean, based on economic things, you really don't see things, deflate like this. You always see things inflated. Same thing with price for used vehicles shot up after the pandemic, but they have decreased over the last couple of years as supply chain snag easy. And again, has nothing to do with what the economy did. This was actually based off during COVID. I believe China shut down. So the Chinese and I think the Japanese as well, they manufactured chips, like electronic chips that went into the vehicles. And because they shut down, they couldn't supply enough. So that's why the price of used vehicles went up because they couldn't make any new vehicles. It says here, we'll continue reading. Deflation, a broad decrease in price, can actually be damaging for the economy. And that is true. And it says here, when prices keep falling, consumers and businesses hold on to their cash. That's what I explained earlier, hoping to save more by deferring their purchases on investments. But when the spending slows, the economic growth stalls, companies' profits shrink, and unemployment rises. So that's why our economy is designed the way it is for inflation to continue to go down. So it says here to close out this article, the Fed aims for a 2% inflation rate in the U.S. So I don't know if we're going to stay at this 2%. We'll see. I believe it's in June when the next CPI report comes out. We'll see what the Fed does and we'll see how things are looking. But it's going to drive big time what happens with the economy. For our third article, these 5 cities could see over 3% apartment rent growth in the next, I think it's 2024. So let's see. It says here, according to the latest analysis, a notable portion of the country's largest 50 apartment markets is poised for rent increase. Specifically, 12% of these markets are expected to see rent growth of 3% or more. And I'm looking at a chart. So if you're listening to this, you can't see this, but I'll name the cities that are expected to grow 3% or higher. And in the top, we have Anaheim. I don't even know where that is. Where is Anaheim? And I'm sorry if you're somebody from Anaheim. I think that's how you say it, Anaheim. We got Chicago, Columbus, Ohio, Detroit, Indianapolis, and San Francisco. I am shocked to see San Francisco on there. And I assume it's because San Francisco probably the rents were super down. So, they were very low. And that's why they're poised to have a 3% increase. Now, interesting enough, Columbus is under. I know in Ohio rents, like the price to rent ratio is a bigger gap. So I'm shocked to see that under. So if you're in that city, that's opportunity for you investors to go take a look, and or even if you're not from there, look at out of state. I know sometimes we live in markets that are super expensive that you can't find no good deals. Maybe it's time for you to start looking at other markets such as these. And again, in between the 2.9 and 2%, the top five in that range, we see Baltimore, Boston, Cincinnati, Cleveland, and Denver. So yeah, and then of course, there's other markets that are going to increase between 1% and 2%. And again, I'll post these links in the show notes so you guys can take a look at yourself. Of course, rents took in some areas it took a hit, and in other areas it just stays stabilized. So I think because of inflation and because um, taxes and insurance are going up, rents are gonna sadly have to increase. I'm a landlord. I don't like doing it because really, in reality, I don't really make more money. Because again, if my insurance and my taxes increase, I just go up by what the market is, and that's what drives it. So, if you like what you see, please subscribe to the channel. Hit that like button. I couldn't think of that. And follow me on social media. I am you see it down here below, right here at Ant1234. I hope everybody has a beautiful morning. And please, again, subscribe to our channel. That's the way we grow. And I hope to see you guys tomorrow morning.